How many contracts should you trade? I get this question a lot. People want to know how many contracts should they be trading? Well, it really comes down to your overall risk to reward, right? Here's a perfect example of a bear flag kind of playing out here, obviously in hindsight right now, but if we were trading this, we would have seen this flag pushing back up. We know it's bearish. Pushing back up here, it's a bear flag, right? Pretty easy. You guys are pretty much experts in trading now that you've watched most of the course. But let's talk about the idea of how many contracts should I trade with this position. What's the easiest way to really kind of know what I should be doing here? So let's say I'm looking to, I've basically entered when we break below the low of these candles. So I am now basically shorting the low of these candles. All right. That is, we'll say 30. 130 is my entry. Now, I see the high of this candle right here is 152. And I pretty much know that I want to risk, off the high of these candles here, 60, 52, this level here for a move down. I'm expecting if we move down to get at least what? This pivot point here, that's 89, 90. From the 30s, that's 40 points. Possibly more room to the downside based on the chart at the time. Let's say I enter one trade, one contract. If I enter one contract here at the 30s and my risk is up here above the 55, 60s, that means I'm risking 30 points on the NASDAQ. How much is that? For one contract, that means I'm risking, need all do the math, $600 on this trade with one contract. Not the best. I normally don't like to risk that much, to be honest. I normally risk around 10 contracts, 10 points. If I'm risking 10 points, that's a $200 risk on 10 points. So 10 points is one contract. That's one contract. $200, 10 points, one contract. One contract, 30 points, $600. So I know that my potential move is 40 points to the downside, possibly more. If we get this break to the downside, that's about a 100-point move down. So from the 130s down there, a little over 100 points, or more than 100 points. Obviously, I would be making how much on one contract? For 100 points, I'd be making, and do the math here. What was that? $2,000? $2,000 there on that 100 points. A lot of stuff on the chart here. So that's a $2,000 winner. I'm risking 600. I'll take that trade all day. It's a great trade. But again, what do I need to focus on? I need to focus on how many contracts. As one contract, I can risk 30 points. Perfect. Risking 30 points, $600 of risk for a $2,000 trade, possibly more on this if it kept going down. I'll take that trade. Risk rewards there. My sizing is there. I'm only going to trade one contract because I know that there is a chance that we push back up for 30 points to the upside to risk. So I can only trade one contract. Here is another example of a bear flag. Now on this trade, you can see it's a little tighter. And if I am shorting here at the 20s for the break to the downside, let's say I short 22s. The high on that candle is 37. Perfect. So I'm only risking 15 points. On 15 points, that would be a $300 mover, a $300 risk, right? I'm risking 300 for a move down to this pivot point from the 20s down there to the 70s. That's 50 points. If I make 50 points, that's $1,000 on one contract. I know earlier that I risked 600 to make 1,000 on one contract, but guess what? I could always trade two contracts here. I could trade two contracts on this, and I'm still only risking $600 with two contracts, right? So now I'm risking 2 contracts, $600, and I'm also possibly making 2,000 because I've now doubled my contract size. Hopefully that makes sense. The biggest thing to think about is what is your risk? How much do you want to risk? If you're taking this trade, how much do you want to risk on this trade? I try to have like a set parameter. I'm trying to risk, like I said, 10 points. So if I'm risking 10 points normally for what I want, that means I've got to kind of size down. If I want to take bigger risk, I need to size down to be consistent. If my normal size, if I'm trading 1 contract to risk 20 points, so I want to risk, $400 total, well, then this is the perfect trade for me. $400. Risk in there 20 points on 1 contract for the possible 1,000 move to the downside, a little over 2-to-1 risk to reward. I'll take that trade all day. Sometimes you'll see me take 1-to-1 risk to reward. I think with my overall strategy, with my win-loss ratio, it's okay to be okay with taking, a 1-to-1 risk to reward. Is it the best? Is 1-to-1 the best? No, I'd rather take 2-to-1. So it all just comes down to sizing. I want to size appropriately so that my risk is consistent. I don't want to trade one setup with 100 contracts and then the very next setup trade 1 contract because I can't control my risk, right? My risk is obviously connected to the amount of contracts I'm trading. You can also trade the micros. Let's say you don't want to risk $200 with 1 contract. Say you want to trade the micros. You can trade the micro NASDAQ. It'll be half the size. So if you're trading, 5 micros, that's half of a one mini. So you can risk a little bit more depending on the sizing. But it all comes down to sizing. You want to find the perfect size for you that allows you to exit a trade, if that makes sense. You want to be able to figure out, like, what's your mental risk? Like, how much are you willing to lose and still follow the plan? To not have any type of emotion, to not have any type of FOMO or greed or hoping and praying. A lot of people, their biggest problem is they oversize in the beginning. They end up blowing up. They over leverage. They end up blowing up. There's nothing wrong with taking the smaller size, having a little bit more wiggle room, and also allowing the trade to breathe. You can't just simply enter a trade. Let's say you enter here, you short 20s. You just can't put your stop loss like right here. You can't just be like, oh, okay, if I'm going to short at 20, I'm going to risk 30. Can't do that because you can see that there's more resistance up there. This is not an actual plan. This is just me gambling, basically going, okay, I'm going to short 20s. I've got my stop right there at the 30s. I'm going to risk 10 points. And well, I get stopped out. You see the market then moves down. If I'm going to trade like that, if I'm going to say, hey, I'm going to wait to get my risk reward to the point where I'm only risking 10 points, well, then that just comes down to being more patient to that idea, right? If you can get a better entry for your risk reward, like let's say here, this candle breaks out 513, but you've got a risk all the way down here. Like that's just too much risk reward. You can't take that trade. You really can't. You just can't take that trade because you don't have a proper spot. If you look at the 1 minute chart, maybe it's a little bit better. Maybe you're risking down there, but still not in line. Sometimes trades will give you or setups will form, but the risk reward's not in line. So you either have to really size down to a very small size, or you just have to wait for a better entry. There's nothing wrong with waiting for a better entry. Remember, patience, being able to size in correctly will allow your trade to really work out. If you don't size in correctly, well, then the problem is the trade, it might be a profitable trade, but you might get stopped out early because you're sizing in too aggressively. You have too much size. Your stop loss is too tight. I see this a lot where traders have their stop loss too tight and it ends up stopping you out and the market ends up going lower or going higher based on the setup. Like this setup right here, we have the 43 kind of break to the downside. You know, your risk is like up here. You're still risking like 30 points. So you really just kind of wait for a better setup here. So we break to the downside and we kind of look at this candle right here. And I'm like, well, I don't really want to just enter right there because I don't want to risk off there. I can't risk this much. Like I just can't do that because if we break there, you know, it's too much risk for me. So I've got to wait and be patient for a better entry. So the better entry here, I guess, would be now we have this little candle. So I can short basically the break of this candle, this area, and then get that move down, risking off that 50 is how I can play it. Just kind of waiting for a better entry. The more patience you can have, the better. Really, I mean, it's funny. Like here, great example. Little flag, little break back to the upside there. So if I'm getting long here at the 70s, you know, where's my stop? My stop's like down this at this low. So again, I'm thinking about my size. I'm thinking about how much I want to risk. Every contract I'm taking, I know that, you know, every 10 points is $200 in a loss. So if I take more contracts, now my 10 points is going to be 600 or 10,000 or vice versa. So you've got to size in for the possible setup and the move. So every setup is a little different, and you got to kind of really focus not so much on how many contracts you're trading, but what is your overall risk reward? What is the risk? If you take 5 contracts, if you take 2 contracts, if you take 1 contract, how much are you actually risking on that trade? So the more that you can kind of breathe, take your time, focus on the risk reward and really size in correctly, that's going to allow you to really let these trades work out. You know, you don't always need to enter with maximum size on every trade, because you know, like, hey, if this breaks out, the pivot point's there, that's 100 points to the upside. So I'm okay if I risk 1 contract right here for a 30-point risk, because I can see that there's a potential for a nice little breakout back to the VWAP there. So that's 100 points. I can risk 30, make 70 points, risking 30, make 100 points, risking 30. That's pretty damn good. That's a great trade in my book. So you want to be able to size in based on the risk reward. And sometimes you'll have a trade where you're like, you don't think there's a ton of room to run, but you have a very tight stop because it's very, you know, giving you a setup in general. That's great. That's what you want to focus on. That's what you want to see, those better opportunities to size in correctly, to have the right risk reward and be able to follow the plan. If you don't size in correctly, you're not going to be able to follow the plan. You're not going to be able to stop out. You got to ask yourself, like, okay, if I take 10 contracts right here, am I going to be able to stop out? No, probably not, because I'm going to be like, oh man, I can't. I'm going to keep holding. I'm going to keep praying. And before I know it, I'm going to end up blowing up because I can't cut off the trade because I'm so emotionally attached to that. So you really want to kind of figure out what is a risk for you that you're not going to be emotionally attached. If you lose $200, are you going to be in emotionally, you know, distraught? If you lose $1,000, are you going to be emotionally distraught? Are you going to ruin your whole entire day? Like figuring that out, and then also like figuring out the perfect, you know, size to play into so that you're following the plan. I think that really is very important as a trader. A lot more than just having a strategy. That's part of the strategy, obviously, like being able to size in correctly, but also like being able to manage the risk and see the setups. And then also sometimes you just got to be patient and wait for a better entry because your risk isn't good enough. Like your risk isn't in line with your overall strategy. So you need to just be a little bit more patient. And a lot of times those better setups will come. They will come if you're just a little bit more patient. And even if you miss out on a move, it's okay because there's more setups, there's more moves to come, there's more opportunities. But if you end up blowing up, you know, on the first trade of the day and you just go on full tilt, you're not learning, you're not growing, you're not building anything. You're just basically donating money to the markets. That's all you're really doing. So sizing is very important. Trying to figure out, you know, the right size for your emotion and then also the setup itself. If you're risking, you know, 50 points, well, I definitely don't want to go in with 100 contracts with 10 contracts and things like that because I just can't manage that risk to the downside and I'll end up blowing up my account. We want to avoid blowing up the accounts, obviously. So sizing, very important. Ask yourself every time you enter a trade, you know, what's my risk? What's my reward? Let me size into this 1 contract, 2 contracts. Totally fine. Figure out kind of what works best for you when it comes to the sizing.